Hey, it's Vinny. Today we're going to be looking at what a fair PE ratio is for Tesla. What is a fair valuation for Tesla? Because it's for so long, people said it was so overvalued. And with the recent crash over the past year, slow train wreck that has unfolded, I think it's at a point where you could make the argument that it's fairly valued, but let's take a look at some numbers here. So we're now at a point where Tesla's EPS is significant enough so that it can be used for valuation purposes. Obviously, for the first 10 or so years that this company was public, or a little less than 10, they weren't profitable. They really didn't become profitable until late 2019. So if we were to look at their earnings per share and the P, try and come up with a fair PE ratio, it's kind of all over the place. Like there's estimates that their 2023 earnings will be $5, which seems low. Some people think $7. So if we assumed a $7 EPS for 2023 and the stock traded at only a 20 times multiple, it would be $140 a share. But it could also trade at a 70 times multiple depending on how the market feels on valuing it. And at a 70 times multiple with $7 EPS, you're going to get a share price of $490. So that's obviously a very wide range. And we're going to look at how we can narrow this down a little bit. 2022 was a crazy year full of black swan events, and it blows my mind. I mean, I really understand that the macro environment has deteriorated, but when you just look at the simple fact that Tesla posted one after another, record quarter after record quarter after record quarter, all-time high vehicle deliveries year over year, all-time high earnings, EPS, and yet the stock finished the year with its worst ever performance from a stock price perspective. Company's best year of all time, worst stock price performance. Please explain that to me. So I thought this was a great time to do this, and I'm glad I found this article, which I'll link to down in the description below, by Fallacy Alarm. Really enjoy reading his content. He's great over on Substack. I'll link that below. But I thought this was a great time because I'm seeing a lot of craziness. I'm seeing a lot of former Tesla bulls getting scared out of their position, thinking it's over, thinking Elon Twittergate here is ruining the company. And I just keep looking at it. I mean, it's my biggest holding, so I like to keep tabs on it and make sure I think I'm still right about it. And I think they're in the strongest position they've ever been in. So let's take a look at what they should really be valued at here. And obviously, this is going to depend on the macro. If we head into the biggest recession that some are forecasting in 2023, obviously this will go out the window. And stocks, there's no bottom in sight. But it's nice to know what would be the fair value, what are some realistic P ratios, and then we can kind of project out what the stock price should be. So let's take a look. So I'll skip over how this is calculated, but again, if you're interested, you can go read the full article. I'll link that below. But so if you can now pick the EPS growth you expect for any company for the next 3 years to find the current year multiple that should come with it. So if you expect a company to grow at 10%, you could probably assign it around a 22 times multiple. So what does all this mean? PE, it's a lot more simple than it seems. Obviously, you've got the stock price, you've got earnings per share, and you have the PE multiple, the price to earnings multiple. So if a company is going to grow 10% next year and you're going to assign it a 22 PE ratio, that would mean take the company's earnings per share for that year, multiply it by 22, and that would be what the stock price could be at. Obviously, there's a lot of other factors, but just from a valuation perspective. So if they were going to grow at 10%, could give it a 22 PE ratio. So in the case of Tesla, they've said that they expect to grow 50% year over year for the foreseeable future, probably, I'd say at least the next few years, through 2025 at least, if everything goes well, if they continue to execute. Obviously, there are a lot of variables, a lot that can happen, but I think they can do it. I think they've shown that they can do it. They've done it thus far. Everyone was freaking out, This year, their growth rate is going to come in around 40%. And I was shocked to see the reaction that so many people said, that's not good enough. That's way below the 50% that you promised, when they didn't say they were going to grow 50% every year. They said they would grow 50% on average over the next 5 years. And if we look so far, they have done that, because if we look at 2021, they grew 60%. If we look at 2022, they grew 40%. Little math, that's a 50% average growth rate. They could grow only 30% in 2023. I got news for you. And if they grew 70% in 2024, they still grew 50% every year. So I don't really understand, the panic that I've really seen in the past few weeks. And again, when you just look at what a crazy year 2022 was, everything that could go wrong has gone wrong. they still managed to grow 40% and you're unhappy with that? I mean, that tells me everything I need to know. If they can still manage to grow 40% in arguably one of the worst years we've had in a long time, as far as the economy just deteriorating, the market's deteriorating, 40%, I mean, you can't, what more can you ask for? So I digress, but if we do, let's say they're going to grow 50% on average here, you could assign them a 54 multiple. So if we just go to this is Tesla's last earnings report here. We look at their EPS, this row. For the last first three quarters of 2022, their GAAP EPS came in at around $2.55. And if we just simply, some napkin math here, if they had 95 cents of EPS last quarter, their vehicle deliveries grew somewhere in the ballpark of 15% quarter over quarter, Q4. So our Q4 EPS, I would estimate, should come in somewhere around $1.10 per share. So if we just do a quick little projection here for 2022, we know that through the first three quarters, they had $2.55 of EPS. Q4, I'm going to estimate $1.10 of EPS. So for a grand total of $2.55 plus $1.10, we got $3.65 of earnings times that 54.7 multiple. The stock price could come in at around $200. Now, do I think this is going to happen? No. Well, 2022 is already over. The market is gone down. Obviously, Tesla right now is trading somewhere around a 30 PE ratio, which realistically to me, if we don't head into a massive recession, if Tesla continues to execute as they have been, that seems like, if not the bottom, very close to it, or a kind of a good idea of, it seemed to have hit that 30 PE, kind of consolidated. We look at the stock here. The last year, it obviously went down 66%, but it's starting to it seems like we're kind of having some consolidation here. So it's been flat here. And again, so I think that the current PE ratio, again, if you factor in that they're growing 50% a year on average, if they continue to do that, if we don't head into a mega recession, it seems to me like this is a fair value bottom, somewhere near the bottom. Now, having said that, that all goes out the window if we do have a massive market meltdown and we have a major recession, then there will be no bottom. The stock could drop another 50%. There's just no way to know that. We can talk about that another time, where this market is headed. But it definitely reassures me to see that, based on what I do know, what I can calculate, if we look at their EPS for 2022 and we think they're going to grow 50% a year and we can assign them that 54 multiple based on that, the stock still has upside. And before the recent jump here, it basically had 100% upside. So I like that. I mean, that sounds good to me. The story is intact. And if we wanted to be conservative, I think at the low end, Tesla in a bad year, maybe they do only grow 30%. So let's say 2023, obviously this EPS number is going to go up. If we go with, it seems like the bottom, the low, if we're going to lowball their EPS for 2023, it seems like somewhere $5.50 could be fair. I mean, that would be, basically 50% EPS growth year over year. We give them a 30% growth. It's still, the stock doubles. Now, a lot can happen here, but this is just a great way to gauge what it should be valued at. Anything can happen. Let's keep going here. This video is getting a little long, so I'm going to cut it here and probably end up making a part 2 and part 3. I'll post those tomorrow and maybe the day after. So if you enjoyed it so far, please don't forget to like and subscribe. Let me know what you think in the comments below, and be on the lookout for part 2 and probably a part 3 here. I don't want it to get too long. We're coming up on 10 minutes here, and I've got about 30 more minutes to edit. So I'll see you guys on the next one.